Well, hello, good evening. And on behalf of ACY Securities, welcome to Market Intelligence. I'm your host, Nadine Blayney. Well, over the next half hour, 40 minutes or so, we're going to take a closer look at the state of play in key commodity markets, and we will be answering your questions about Aussie listed stocks as well. Thank you for all of those who submitted questions early, and we will endeavor to get to some more throughout this virtual investor event as well. So what we want to do is help you plan your attack for 2024. Keep that in mind. We'll be thinking about where these key commodity markets are likely to head. So taking a top-down look as well as those individual stocks. Just a little bit about ACY. It's one of Australia's fastest growing multi-asset CFD providers. ACY has a team of more than 10 market analysts right around the globe. And in fact, they do publish daily free market insights that can help you gain an edge in trading. And of course, two of those analysts are here with me today. Welcome to Market Intelligence, Peter Penn from ACY, as well as Luca Santos from ACY, both who have really deep understanding of markets, of economics, of trading, of course, as well. And they're here just to impart their knowledge to you and to help answer your questions as well. So as mentioned, feel free to get some of those questions coming in throughout this event as well. Okay, what we're going to do first though, guys, is set the scene when it comes to what is driving key commodity markets now, what will likely continue to do so. So I'll start with you, Peter. When you're thinking about the key drivers for our viewers at home, what should they be paying attention to help give them an indication of what's to come?
Okay, so I spend mainly of my time to analyze the relationship between different kind of assets. So what I have found, not recently, but for quite a long time, is that the commodity price is much related to the US bond yield. It is not only about the short term, but about the long term. But the relationship between those two kind of assets varies during times. So in the chart showed, we can see the correlation coefficient between the copper and also the US bond yield just changed differently during the past 3 years. So before the June 2022, there is a strong positive relationship, but after June 2022, the relationship became too negative, and especially negative close to -1. It is a very strong negative relations. Yeah. So the reason behind that is because people has no belief in the current economy, not only Australia, but mainly in Western countries, in United States, in Europe countries. So they are thinking the economy won't get a soft landing. So at the time started, people, when they see the bond yield goes up, the commodity price will goes down at the same time. So it is a very big difference. So what happened in June 2022 is that the United States Federal Reserve, at the first time to hike the interest rate by 75 basis points. So it has surprised the market, and most of the people will think there will be a recession there. It's not only the copper, but also the soybean, the crude oil, the iron ore. At the same time, on June 2022, they all crashed at the same time. So we will see the recent relationship is very clear when the bond yield goes up and the commodity price goes down. That's the key driver of the commodity price. And also, recently we has experienced a war in Israel, and when the war started, the bond yield is still going up. So that's the trend, and it gives a lot of pressure on commodity price, no matter what commodity it is.
Yeah, so Luca, that's a great point. You cannot divorce geopolitics and commodities either.
No, you can't. So everything works combined, right? You can't just look at one market, especially Forex, G10 economies and all of those other markets. You sort of need to combine everything together, especially the yields as well. We had a massive strike on yields this week. I think it was Tuesday, wasn't it? Tuesday, Wednesday. The whole market, moved together, even commodity prices. So then you kept yourself in like, oh, what's happening? So definitely you can't. Yeah, no.
Yeah, okay. So when you are thinking about key commodity drivers into 2024, it's a very big unknown what will happen in the Middle East. Of course, Ukraine, Russia war, that's taken a back seat, but that's still live.
Yes.
So those are two key geopolitical events that we're watching?
Definitely. Like, look, that's a good point you touch it, because everyone thinks that Ukraine is it's done, right? No one talks about it anymore. So everyone thinks, okay, it's done. So there's no effect in the market anymore. But indeed, it does have effect in the market, right? But anyways, let's talk a little bit about the Middle East conflict. I wouldn't call it as a war, because Israel called it as a war, right? So we have Israel and the Middle East basically more than 40% producer on energy and as well on oil. So when you think about, okay, something happens over there, what happens with the oil prices and energy prices, right? It goes up. So we had, since the beginning of this month, more than 5 to 6% up on oil prices, right? We opened at the market when, I remember that because I was at home and then everything collapsed.
Yeah.
And I was like, oh, I need to go to the office and see what's going to happen. First thing arrived, I was like, it's going to open huge up move tomorrow morning, right, on Monday. And indeed, it opened with a 2% gap, the market. And I thought, okay, it may come back, but it didn't. It was just rising, right? The whole week was, I think, 5, 6%, even 7% up, and then come back. But definitely, we can't, you know, if the conflict escalates even more. So let's say US, you know, US is sort of helping Israel in a sense of, it's hard to say that because they are not there fighting with Israel, with Gaza, right? So, but if it becomes like that, if it goes there and go and fight, then it's going to be a problem.
Yeah. Okay. So, Peter, that's, you know, bond yields, check. We'll have to watch those as mining stock investors. Geopolitics, check. Have to watch that. But the elephant in the room, of course, is China right now, particularly in relation to the property sector there. How much do you anticipate that will continue to drive the commodities story through the end of the year and into 2024?
Okay, so when it comes to China, we will say that the coal price and the iron ore price is strongly related to the Chinese property market. We have a chart to show the relationship between the BHP share price and also the HK 15 index, which is influenced by the Chinese property market. So it's a quite strong relationship, a positive linear correlation between these two assets. Just after the Chinese has loosened the restriction, so people has been expected the Chinese economy to recover, and also the commodity price will recover based on that. However, just like this morning, like our new RBA governor, Michelle Blook said that the Chinese market is experience a lot of uncertainty, especially when it comes to property market. The economy is recovery, but the recovery is slow. The Chinese government need a quality recovery, not the fast recovery. So this does some pressure on the commodity stock stock price, but not too much pressure on the iron ore price. That's the difference. The difference I want to explain more about it. It is because the commodity price not only, but mainly focus on the current demand and supply.
Yeah.
So the demand is still going up for the recovery, but people may think that the recovery will be slower than expected. So the stock price, which is most related to expectation for the future, for the longer term. Yeah, so that's the reason why the HK50 and the BHP stock price going a little bit sideways or sideways down. It reflects their uncertainty, their unsure about the property market.
Okay, fascinating. Right, so let's now I just heard you mention Forex earlier, but I would like to speak, because we're speaking to Aussie traders and investors right now. So what impact, when you're thinking about the prospect for commodity stocks going forward, do you pin to the future and the fortunes of the Aussie dollar?
Okay, so there's something happening right now, okay? We have the war, first of all, right? And it is impacting the commodity prices because it's a safe haven, right? So anything when goes on the market will go crazy. Most of the investors tends to be on safe havens, right? I want my money to be safe in terms of those things that can happen out of control. So gold is rising, okay? But unfortunately, Australian dollar is not going too well. Okay, we've seen this morning Australian dollar hitting lower than 3 months ago. We did have inflation up. Technically, high inflation gives a strength to the currency, right? But it didn't work. It worked for like 15 minutes after we had a high inflation yesterday, but then that was it. The market came down the whole. It just shows us that the US dollar is still very strong compared to global economies, and that investors is still looking for safe havens as US dollar, and commodities prices and commodities as well, like gold. So in overall, I think this will impact Australia in a negative way.
Okay, so commodity investors, those that are watching mining stocks, need to keep an eye trained on the Aussie as well.
As well, definitely. Yeah.
Okay, so let's talk about the different key commodities just briefly. You've mentioned, Peter, iron ore. So iron ore is, we saw iron ore a bit lackluster today, just as an example, again, because there's concern that demand will remain weak because of the problems in Chinese property sector. What is your outlook for iron ore?
So the outlook of iron ore is the outlook of Chinese property market. So my personal opinion is that property market will be recovery, but in a slow pace. There is many people back in China don't think about it because they has some endorsement bias. But from the outside, when we watch the market, the price, the sales, those numbers, people who go to see the inspection for the house, it is keep rising. It is doing a recovery. So the big fiscal and monetary support from the Chinese government, Chinese central banks, does do some good to the property market. So I think, yes, there is uncertainty, but with this uncertainty, the iron ore stock and the iron ore commodity price has reached its bottom and keeps rising for the next year, I think.
So you're very bullish on iron ore?
Not very bullish.
Okay.
Not that bullish, but yes, I'm bullish.
You're bullish. Yeah. Okay. I'm going to do just a little bit of a tour around some of the key commodities. So, Luca, actually, let's just go to a viewer question on this one. They're coming in thick and fast. Thank you so much. This one is coming from Rodney. So it's a twist on lithium, saying, is the hype over lithium overdone? Perhaps sodium or another form of battery will become dominant. So that is a question from Rodney. I'll put the lithium question to you again, Peter.
Okay. I have too much things to say about lithium because I bought lithium from 2020. At that time, the stock called Oro Corbury. That's very. At that time, the price is only $2.5, and now it is $15. I sold it in June. The reason I bought it is because it's just the time before Biden get elected, and Biden said that he will support the EV, electronic vehicle, and at that time I bought lithium. But after 3 years, the lithium price has risen a lot, and it has already priced in to the stock market. So that's the reason why those stocks, especially for lithium price and nickel, they are all overpriced.
So we've got your lithium carbonate chart up as well.
Yeah.
So tell us what we're looking at.
Yeah, so in the past years, we can see the lithium price dropped from 600K to 1500K, not 1500K, 150K. So it is a big drop in lithium price, especially when Guangzhou exchange started to get the lithium future online, and people started short. Before that, they can't short, but now they can short the lithium price, and the lithium price started going from 600K and down to 150K. So I think there is some inside information there, definitely. So people in this industry start to realize there is much more supply than the demand. The demand is keep rising, everybody knows, but the supply has been raised 40% per year in the last past 2 years. That's the reason why it is overbought. I'm not saying the demand is too low. No, the demand is rising, but the supply is rising further. Yeah, that's the reason why.
So will lithium prices continue to come under pressure in 2024?
Yes,
okay.
I think so.
That's what we're getting to. All right, we've got another question coming in. This one is from Peter. Peter says, well, different Peter, different, a viewer Peter, apologies. Met coal prediction for the next 12 months. This is viewer question. What is your met coal prediction for the next 12 months?
It's exactly the same with iron ore. If we compare the met coal price and the iron ore price, I can say it's exactly the same, because if you compare to steaming coal, we have two kind of coals. One is cooking for steel making, another is steaming coal, which is for power generation. So if we watch the steaming coal, it's different. But when we just put met coal price and iron coal price together, they are exactly the same. So they all based on the demand from China. They all based on the demand for steel making, and they all rely on the property market. So the same, iron ore bullish, met coal also bullish.
Okay. Well, so there you go. If you're thinking about your 2024 strategy, these are little things you should be writing down in the view of Peter Pan from ACY. Now, we've had lots of questions coming in about copper, so I'm going to start large. This is from Bernie. Bernie, thanks for watching or writing in ahead of time saying, can I get an opinion on copper? So I'll go to you, Luca, on copper, because copper is a very big picture, but it does have, the supply-demand dynamics behind it as well.
Right. Okay, so copper, my personal opinion on copper would be that we're going to most probably, we'll transition from a supply-demand balance that we had in 2023 to a major surplus in the next 2024, right? I don't know if you guys watched the spot FX on copper, but indeed we had a decline over 16%, right? 1.6. That's what ICSG said. That's the International Copper Study Group. They've mentioned that next year would be a good year for copper. Even they've had a revised up, right? Because the expectation was of production of copper beginning of this year for next year was at 297,000 metric tons, right? 297. So then they came in the last, it was beginning of this month, they had a meeting and they revised it up for 467,000. So, if you think about this, there is an opportunity there. Of course, there is an opportunity. So definitely I would have copper on my portfolio. But, I go ahead. For this year, I still think that we may have a further drop on copper prices.
Because of that supply dynamic.
Because of the supply dynamic, exactly. But it's interesting because Peter was talking about China as well. And, I was coming here and I was looking at my phone. I was like, wait a minute. So the Western countries are not doing too great, right? They are not having too much copper imports and exports and so on. But China, it is making surplus for those countries. So it's about 1% more than combining all the negative Western countries. China still can do the surplus for those countries. You know, so Western countries can be on deficit, China come into a surplus. So definitely a good option for 2024. I would wait a little bit more if you want to buy the spot actually. But we're probably going to have that question on how can I get exposure.
Yeah, I can guarantee you we will. But before we get to your questions, and thank you, I know they keep coming in, and this will answer a couple of the questions as well that are coming in. Have to talk to you about uranium. You know, uranium bugs are really happy. I spoke with one earlier today.
Yeah.
What's your view on uranium going forward? Because so much of it comes down when you come to these Aussie miners or potential miners and producers. That it's a spot price for uranium. Where do you see that headed?
It's a good question. Not too much into uranium.
No.
Maybe Peter can answer this question.
Uranium?
Maybe.
Yeah, uranium. It's kind of a weapon resource. So I would say that it will be rising based on not on the fundamental side, but on the new side.
Yeah.
So if the war started to be bigger, like the Israel war,
it starts to increase.
Involved in Iran, involved in Iraq, or involved in Saudi Arabia, and those kind of weapon resource will goes up further.
Let's hope that doesn't happen. Okay.
Yeah.
Can we turn to something? What?
I don't know, right?
Well,
there are opportunities.
Yeah. Okay.
Yeah.
But yeah, let's hope
but
that doesn't happen.
For us analysis, we need to have no bias.
Yes.
Yep.
So
Yeah.
We
I think
need
that's
to
a
be
good
neutral
point.
every time. So.
Yeah, and we're looking at this very much from a market's perspective. But really do want to ask Luca about gold. You'd have a view on gold, wouldn't you?
Yeah, I do. For this year or next year?
Well, yeah, into next year, 2024.
All right, so pretty much this year gold was a good performer, right? It was a good performer, and as I've mentioned, and when the Israel war came up, the gold price just went up crazy. So, investors seeking this safe haven, right? And we did actually hit it. Well, we did not, but it was 1,998. So I'm going to call it 2,000, right? So we did hit the 2,000 mark on gold. For next year, I would definitely have gold. Definitely have gold on my portfolio, right? I would buy spot gold against US dollar.
Okay.
Yeah, so the reasons being, if this scenario escalates, right, because, the war have been there for a quite long time already, but they haven't had these big, impulses from Hamas and all of those other groups that are there right now. If this escalates, as Peter said, let's hope it not, then gold would definitely be a seek for investors, right? But then there's another thing as well. When the central banks start to tweak in the monetary policy, you don't want to have your money on fixed rates right now on US or whatever country it's going to be. You want to prefer to be on gold. So you're going to go and buy spot gold. So definitely next year I would have gold on my portfolio. Yeah.
Peter, you agree?
Yeah, but I want to add another thing is that it depends on what the size of the war. If it is the same as like Russia and Ukraine, and the gold price when it reached to 2,000, and I think it will drop, and maybe drop further because as I said, the bond yield decide everything. When the bond yield goes up, everything goes down. But if the war involved in like Iraq, Iran, or even Saudi Arabia, Russia, or China, and it will be bigger. It is kind of like the Sixth Middle East War or the World War III. Yeah, I don't hope for that, but we need to. If you buy gold, you are to hedge those kind of war, not the current. I think is still a confliction between Israel and Palestine.
Okay, so everybody, that's how ACY sees the world. That's how ACY and my, these market analysts here see the future for key commodities in 2024. So we're itching to get at it. Let's now find out, I guess, how you can gain some of the best exposure to some of those thematics. So first question is coming in from Bryce. I will go to you on this, Luca. He is saying, what is the best way on the ASX to gain copper exposure? I guess with copper, you also sometimes get gold as well.
Yeah, I knew it would be coming, this question. Because no one asks you what are your opinion on that? But they don't ask you, how can I get exposure on that?
Yeah.
there's so many ways to get exposure actually on copper, not only on ASX, right? I will go a bit further on this question. Can I?
Yes, you may.
All right. So you can go for ETFs, you can go for futures, you can go for options, you can go even for CFD, right? But it just depends on how risky you want to take, because if you go for CFDs, there are leverage there, right? So you just need to remember this. We do provide CFD on ACY, so test it out. But I would go for EVN. We had a very good year. We are having a very good year for EVN at the moment on ASX. We are up more than 17%.
So you're talking evolution, right?
Yeah, evolution. Sorry, yeah. I'm talking about the evolution as well as Sandfire Resources.
Sandfire, yeah.
SFR.
SF, yep.
Yeah, correct. They've been up 6% already this year, around 7%. I couldn't look at the closed market today. But that would be, yeah, exactly. So that's it. So it is a good exposure to have on Sandfire. I do believe the company can go higher on the prices.
Okay, wonderful. Let's just crack on with it. This is from Tanya. Tanya, thank you for writing in, asking, what is your view on lithium, which we've already discussed, and saying in particular, Pilbara and IGO. So to you, Peter, on lithium, Pilbara and IGO.
Yeah, actually I have call on short on like PLS for
so you're one of the
quite
shorts.
a time.
Yeah.
We mentioned this.
Yeah, I mentioned this for like the last 3 months.
Exactly.
And keep shorting. For short, I'm not meaning to make profit, but to hedge your position. The reason behind that, just as I said, because lithium is much more overpriced, especially when the supply, people may not recognize the supply is increasing much more than people may think. So for PLS, I think it is downside trend very clear. And also today, I think they released their quarter report in this morning, and the price just jumped lower but rebounds back. It is because people has already know. When you see the chart of lithium, you know that people know the revenue will go down. Their revenue compared to the previous quarter goes down like 42%, but people already know. Yes, so it won't escalate the downside, but it is the downside trend. So if you ask me, I would say it has not reached its bottom. From technical side, 3.5 it is a good support, but I'm afraid it will not provide enough support to stand up. So I would recommend to like 2.7 or like 3%, because I still believe in long term the demand is still there, but people are investing, keeping merging, keeping like building up new like mining there. So the supply is keeping up. So downside trend, yes.
So still
opportunity,
shorting.
yes, but not in short term.
Okay, not the short term.
Peter coming to my desk, let's short these, man. I was like, okay, man, let's do it.
He deserves to be proven right sometimes, doesn't he?
Yeah,
All right.
yeah.
IGO, just a quick thought on IGO.
IGO is a little bit different. It is more diversified. It has nickel, it has lithium. PLS has more, mainly on the very good lithium, but IGO has nickel, like copper, and also lithium. So it is more diverse. But when we see the price, they are the same. Especially when we consider the risk-adjusted return, they are exactly the same during the past 3 years. So I would say, if you want to take my opinion for PLS, that's the same for IGO. I think the bottom maybe 10 or 9, the price will have a stronger support, but not in short term. Yeah.
I'm just curious now, how would you hedge this if, the risk?
Because as I said, I buy like AKE or OCAM, so I will short like PLS further, because when I short, I think lithium is going down, not think all of those mining companies going down. So I will definitely only short lithium company, and PLS is a pure lithium company.
So can you go long and short use on ACY?
Yes, we can.
Okay.
Yeah.
Let's get to the next question that has come in. I think we partly answered. Oh, let's go to the BHP Rio question. So saying BHP or Rio, which offers the investor better long-term financial outcomes?
Okay. So both of these are our own company, but if we want to have the difference, BHP, after it sold its oil business to Woodside, BHP are more focusing on coal, both steaming and coking coal, and Rio Tinto focus on more diversified mining like aluminum, like copper and everything around the mining
But
system.
Rio Tinto has a lot of iron ore. BHP also is getting into nickel. BHP has
Yes.
iron ore.
Yes.
BHP has copper as well. It's bought Oz Minerals.
Yes, but when we check the financial report, the BHP again is more focused on coal. Of course, it has other mining, but when we talk about the revenue, coal is the most important thing. So if you want me to choose between these two, I think BHP is better because coal price is more related to Chinese market, but also other like copper, like aluminum, it will get much more pressure by the bond yield. But I don't invest any of these two.
No.
I bought Fortescue for myself, and I also bought QRE, which is a mining ETF. For the entire mining sectors, because I want to have my portfolio more separate in mining.
Okay, so you've got Fortescue, and you've got, sorry, the ETF was?
QRE.
QRE.
Yeah. And
Okay.
Fortescue is a pure, like I said,
Pure
a
iron
pure
ore.
iron ore company compared to the other two.
Okay, interesting. Now, we've got a question that has come in on gold. This is for Stuart. Stuart, thank you for writing in to us saying, on gold miners with copper assets, is evolution, I think you mentioned it, is evolution mining a best, okay, this is interesting, thinking about 2024 strategy, medium to long-term play on the ASX, or is it better to look overseas?
No.
No.
Not overseas. No.
Okay.
In my opinion, let's go AVN here. Right, so look at the chart. If we can put the chart there, I don't know. Yeah, look at that. The price is it's ranging, right?
Yep.
So we saw from $2 all the way to 396, let's say, on April, May, and then now we're just ranging on the price, right? I guess the price will come down a bit, but then if the price come down, let's say for 330, 328, I would be buying again EVN. That would be the best option for me. You know, I guess with those commodity prices set to rise in 2024, as I just mentioned, I guess it would be a good option to be on here, on EVN. Let's support a country, I would say.
Well, and also the Aussie dollar gold price.
Exactly, the Aussie dollar gold price as well.
Okay.
Actually, Aussie dollar gold price is performed better
Oh, absolutely.
than other.
Yeah.
Yeah, that's true.
Because the Aussie dollar is dropping.
It's
right?
dropping,
Yeah.
yeah. So when we have,
And that's why we set the scene for viewers as well, because sometimes you don't make the immediate correlation between Aussie dollar and some of these ASX listed companies. But
Yeah.
you know, when you're making gold and selling in Aussie dollars, it makes a difference. All right, let's get to the next question on the list. And again, I think our viewers are in tune with you guys or something. Duncan has written in saying, any thoughts on Alchem, ALK?
Oh.
I think you said
That's
that
what
was
I
one
buy.
of, yeah.
Yeah.
Okay, so flesh that
Alchem-
out a little bit for us.
Yeah, for Ocam, because it is, why I buy Ocam is because, and I keep it for half my position, is because it's so diversified. It has like mining company, it has also like conversion facilities. It converts lithium core, hard rock lithium to like battery kind of lithium. So, and it also has like companies all over the world, like Japan, like America, and it is more diversified. What I prefer AKE is because it faces to a lower level of regulation risk. Because recently the RBA, also the senator, is talking about increased tax on lithium company, on mining companies, because they earn too much, right? It is a risk. It is a regular risk, but for AKE, it is diversified. Not only on lithium on the company side, but also on the regulation side.
Mm-hmm.
Yeah.
We have had a question come in from one of our viewers, and it's pretty general, but I think it's what everybody is thinking of when we see the amount of money that governments are putting into critical minerals, to rare earths and the like. This is from Limbertus. Do either of you have a clear view on rare earths as we head into 2024?
Yeah, I think rare earths, that's what I focus less about.
Okay.
But rare earths has a strong relationship between the policy in China and the green energy policies all over the world. It used to be a very strong production back in China, but many people say it's like dirty. Because it's produced a lot of pollution in China and produce too much pollution in the river, in the air. So China has limited its production, but now we can see that the production all over the world for rare earths has steadily increased. That's a good thing to know, but for longer term, I do think rare earths, no matter for the price or no matter for the stock price, it will go sideways. That's what on my own opinion.
Yeah,
sideways.
well, we're always told that rare earths are actually not that rare after all, that they are, being lumped in with the critical minerals sort of thematic that is very much policy driven. Hey, you've talked about gold quite a bit, Luca. Just a quick question from John. I know we do have our eye on the clock as well. Saying gold has had so much coverage this year, with silver trailing despite its industrial use. Do you have any thoughts on silver?
I think silver will continue. We may have a rally on silver next year. I guess this is my opinion. I want to hear your opinion as well. But I think we are on the same road because it's pretty crazy how gold and silver, they are kind of correlated. When gold go up, silver tends to go up as well. I think there is a lagging right now at the silver price because we did, as I've mentioned, we had the crazy up move on gold. Mm-hmm. May we expect not crazy as gold, definitely not that crazy, but maybe an upward movement on silver as well.
Yeah. Actually, I do a lot of research between the relationship between the silver and gold. The main difference between that is their correlation between the bond yield, long-term bond yield and short-term bond yield towards gold and silver is different. So gold is a little bit more, but the little bit it makes the difference. A little bit more focused on the 2 years bond yield, but silver is more based on the 30 years bond yield. The guess behind that is because silver is more related to the market economy. When the economy is good, the consumption of the production, no matter what it is industry production or the consumption for the necklace or something, it will be better. Yeah, but gold, when the economy is bad, the gold price will perform better than silver.
Because
that's the difference.
They're seeking the safe haven.
Yeah, but still, they go the same way. That the difference is just the gap between the silver and gold. Yeah.
Okay, there you go. That's a live one. Now, can I sneak in one more from George? George, thank you so much for writing in. I think we mentioned uranium earlier on. It was Peter's view that this is a commodity that will be tied to geopolitics, really, as we move through the remainder of this year and in 2024. But this one is from George. He's saying, do you have a view on vanadium, including AVL? Don't know if you do.
I don't.
No. All right, George, thanks.
Yeah.
I'll put it to the guys and we'll get them to answer it for you at a later date. But we'll thank you for, no, it's okay. These are coming in live. It's a skill to have to keep up. All right, look, let's get to the last one on the list. This is coming from Suraj. Thank you for this. And this is, I guess, broadening it out, which is actually a nice way to end this. Will there be a Santa Claus rally? Well,
Do you want the happy answer?
No, I want what you believe, what you think based on all the research that you guys do and the charts that you watch every day.
I don't think Santa Claus will be giving us a present this year.
Yeah,
Why not?
because you are grown up.
Yeah.
Yeah.
Yeah. I guess not only on stocks, if we go for Santa Claus, right? Let's be a bit more. I like to be more macro on my analysis. If you wanna get a rally, let's go gold, right? You sort of missed the entries right now on gold, but next year would be a good point. But it's not the Santa Claus rally. But you could have had a Santa Claus rally if you bought gold a few months back, like a month and a half ago. But yeah.
So what about equity indices? Do you think that there will be a seasonal uplift toward the end of the year, Peter?
No, definitely not. Because when we talk about equity market, our assumption is like strong, efficient market, which means if the stuff everybody knows or the most of people has found the rule, you can't make profit anymore. Yeah, that's the assumption. There is not only Santa Claus rally. Back in China, there is called Chinese New Year rally.
Yeah.
It mostly at most of the time, I don't believe it happens. Yeah, so it's just like PRS today. Like the report of the quarterly season, like 42% of the drop of the revenue. It's a very big difference. But what happens to the price? It drops down and goes up because people already know. So if it do happens, there is a Santa Claus rally, and most of people know you can't make any profit from it.
Yeah, that's
so
the
there
thing.
is no rally.
Yeah, that's the thing, because everyone thinks that every year is going to have a Santa Claus rally.
Yeah.
But it's so complicated on the moment that we are right now in the global market. It's yeah.
And you don't think we're getting soft landings in economies?
Nah. Well, everyone is talking about, okay, Fed was just saying we may have a soft landing. I don't think they will do. Australia, no way.
Yeah.
RBA, no way. Bank of Canada, no way as well. So I'm still pretty bullish on US dollar as overall, and selling all of the other currencies. Australian dollar, euro, pound, UK is pretty bad at the moment. Europe's pretty bad at the moment. We had the PMIs this week. Mm-hmm. It was awful. Everyone was, okay, it may be better. No, it wasn't. It was really, really bad. Even with the IFO's business constant, it couldn't keep it up. The euro just dropping. So in terms of overview, yeah, it's pretty much on buying US dollars.
And Peter, you believe that this is a risky time for investors?
Actually, risky is not a bad thing. If you want to get higher return, always you will face big risk. So uncertainty is the only opportunity that you can win some money in the market. That's what I believe.
All right. Well, gents, we're out of time. Thank you so much. Thank you for joining us here in studio. And for those of you, thank you for joining us online, watching live or on demand. And we do have a few at our ausbiz studios as well this time around. So on behalf of ACY, I thank you as well. If you'd like to learn a bit more about trading, ACY has 4 webinars a week, I'm told, right? 4?
Yeah.
And they're actually free to register and attend. So we do hope that we can do this again soon. And of course, you can watch AusBiz daily at ausbiz.com.au. Have a great evening. Thanks again.